Absolutely. And you always talk about asymmetrical bets
Yeah.
because, and I'm a big fan of that. You have
Yeah.
to figure out,
Yeah.
where
Yeah.
you can have tremendous upside.
Yeah.
Dive into that concept a little bit more. What made you realize that, there were opportunities that you
So,
could spot?
well, to be honest, that is first is Nimish Bhai.
Hmm.
He says if it's not, you have to be right on all the 10 bets, but when you win,
Hmm.
you shouldn't regret that I only won so much. So both. So okay, let me take a step back. He's saying the only thing in your control is your entry. After that, what the entrepreneur does, what the economy does, what the world does is not in your hands.
Hmm.
Right? You may think I know perfectly this is the momentum of this business, this is where it will go. Regulation can change. The entrepreneur's mindset may change. He may
Yeah.
start stealing money, like you said, in some companies. With all good intentions, everyone starts. Regulation may change from the US, some tariff may come, blah, 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 whatever. So only if your entry price is so attractive that even the most bearish guy cannot come and shake your conviction.
Hmm.
So you have to start with that knowledge and that conviction to know that what I'm betting on works for me. And you're going somewhat against the world because it won't be a popular
Yeah.
stock at that time. But he taught us to think in terms of possibilities before probabilities.
Hmm.
That is it possible this company can earn its market cap in its lifetime? Maybe 10 years later, 20 years later. Is it possible? If you're buying a company for whatever, $100 million total value,
Hmm.
can this company ever make $100 million profit? Otherwise, why are you going in?
Hmm.
I've converted it to a more easy one for youngsters today. I say, in 5 years, can this company be a 5p stock? So if it's very, very high growth,
Yeah.
how many years ahead are you paying for?
Hmm.
So if you think, no, it's 5p after 10 years, then do you have the horizon of 10 years to be with that company? Because after that, your really earning will start. Because eventual destination of most companies will end up somewhere between 15 and 25. Like even
Yeah.
take the great IT companies of today. They finally went to the journey of 100 and they are now closer to 20.
Yeah.
So at some point in that journey, it will be, and the more you pay upfront, the longer you have to wait. So if that asymmetrical bet then looks outsized, that if I buy this at say a 5 multiple 5 years hence,
Hmm.
I know what journey could be, which means I better know the business and what could impact it. And B, I'm giving a chance for myself to get a P upside.
Hmm.
Because if I'm already paying 50p, then what is my upside? My
Yeah.
downside is on P and my only upside is earnings. Here I can get both. So worst case, I'll make 15p, so it'll be 3 times in 5 years, which is 24% compounding. And if hopefully I'm in a good business, I can make 5 times, which is 40% compounding. And if you get a kind of bubble going, which occasionally happens in life,
Yeah.
and you get to a 50p, then wow, you're in heaven. But when you get those, then don't be pussyfooting. The second thing he taught us was position sizing. That then don't buy 50 stocks, 2% each. Then you load up. Like my son, he made an investment 2-3 years ago, and he had a kitty of whatever, let's just say 100. And he found a company which I've spoken about publicly, so I'll share, called Gravita, for example. So a
Right.
very old business, picking up waste lead from batteries,
Yeah.
discarded from cars. The macro theme is, yeah, it will go into ESG, blah, blah, doing good for the world. And he's also impact-oriented chef. You can see the profit of this company back in the day. You could see easily they will do 3 times in terms of profit. There were fears because they were sourcing from rest of the world, Africa. Will the money come back? How clean? How dodgy? Whatever. Because when you're unknown, everyone asks questions. When your P is 10, they are questioned. When your P is 30, then broker reports will come
Yeah.
with 50 multiples on them. So he met them. He went visited. He came back very convinced that yeah, they can make this 10-11% type margin. This is the volume growth possible on lead, aluminium, plastic still lies ahead of you, rubber. So many things they can do. The team is completely united. Team which was built together from the founders, college colleagues, and so on. All been there for very long, and the runway looks clear. And because he was early in life, a young guy, he would have bought maybe 2 crores out of his 100. So I say now you size up over here, and then this is where you'll make 100 crores. So that's what I mean by it's a asymmetrical bet. You start with a multiple of, I think it was probably 10 or thereabouts, and then it went all the way to 30, and it's gone 10x for him in like
Wow.
3 years. So
Yeah.
I'm saying it doesn't have to be necessarily a sexy business and a tech business. And he comes from that sort of background where he enjoys tech and biotech and EV
So how
and
did
all
you
of that.
find this
But this is the learning that money is to be made everywhere. There are cycles. Like the last decade may have belonged to tech. I am of the view this decade belongs to hard assets. Like gold is going to do well, silver is doing well, uranium will do well, copper will do well, real estate is doing well. So there are waves in the world, and you have to get aligned to them.
Yeah.
And that's the sort of learning which comes out.
Yeah, and value investing has always been your forte. So this
There's only value investing in the world. Anyone who
But
tells
has
you
your-
otherwise,
yeah, but has it
otherwise it's
evolved?
momentum investing. So you may call it growth investing, but growth is saying what is the value I'm getting for this future growth at what point. That's how I described it. That let's say you bought Meta at certain point. At what point in life was Meta also a 5p stock? No, looking back from that period in time. Like Nvidia before 2019, what are the earnings? Now, if you were the person who knew the tech and he said this earnings are going to go up, what it's gone up what 60 times,
Exponentially, yeah.
some crazy number like that.
Yeah.
Now, I don't understand that tech, so I have no reason to participate there. But I used to also wonder someone buying this at 20, 30, 40 times sales. But that sales actually materialized. I have not seen in my life. I'm stunned with the rate of change in Nvidia.
Yeah.
It's like a bubble which parallels what happened to Cisco in 2000. And it will also, I feel, go the same way eventually because it's a capex good stock. But if the earnings is going to go up 30, 40 times, if you're paying 30 times sales, 20 times sales, in 3 years, you're going to look damn smart.
Yeah.
But if I don't know it and I'm just chasing, that train and it stops suddenly, I'll be left holding the baby.
Yeah.
So that's why I say, do you know longevity of this business and what could drive its earnings? If you're looking, like Buffett used to buy in the old days, he bought brands. He was also paying a lot for the future.
Yeah.
He was not buying 10p stocks when you're buying brands
Yeah.
because the brands were the platform companies of that era. Today we are using a more cool term called it's a platform play.
Yeah.
Platform play means I'm doing all my investments upfront through my P&L and then I'll get operating leverage. So say we did Lenskart when I was in my TPG days. We paid a lot for the future, but guy is 28, super sharp, knows what he's doing, maturity beyond his years. 25% of India needs eyewear, plus he can go overseas. And you know that I'm going to make a 60% kind of gross margin over here. Eventually it has to come to a 15-20% type EBITDA.
Yeah.
On that basis, I can know what multiple of sale I can pay for this company because I know what the PAT will be of this company. Let's say he ends up with a 10-time post-tax profit on his sales. And he'll trade eventually at 20-25 multiple, let's say. So 3 times sales, if you pay for someone like that, you're in business.
Yeah.
And if you're growing at 50%, that means I've taken a bet 2 years ahead of time. So I paid 5 times or 6 times sales. So you can slice and dice anyway, but eventually you're looking for value.
Yeah.
And what am I going to capture and in what time frame? The fun with being a private proprietary investor is our time frame can be very different from the market.
It's
So
evergreen
a
capital.
local fund can be benchmarked every quarter.
Yeah.
They may suffer 1 or 2 years until the trustees or the customers will fire them.
Hmm.
A private equity fund by definition has a 5-year, 7-year life cycle.
Yeah.
There's a company which we've been involved in now for maybe more than 10 years now, and he's gone from basically zero to $300 million dollars of profit.
Wow.
Now, if you were a fund, you would have sold out many times
Yeah.
over. Like even Lenskart, because of the life of the
Yeah,
fund.
I was going to ask you
TPG
that
sold.
how does one decide when to sell
No,
in these
that
things?
was in TPG days. So they
Yeah.
had a fund life and they have
Yeah.
to, they
Okay.
can't keep evergreening. So they made the exit and the next funds have come and they've taken it forward. But that's why the Sequoias of the world have now come back and said we want permanent capital.
Yeah.
Because we're helping these companies come to this stage. And then from here, again, they become 10x, 100x and we feel left out.
Yeah.
So that whole journey, how much do you want to play and be part of, is up to you. And therefore, being the ultimate nirvana as an investor is to be a private investor. I'm not answerable to anyone.
Yeah.
And if I get things wrong, only my wife knows. And she anyway beats me up for various other things, not only this. But yeah, like I said, you design the life you want.